Good morning, Merlin. Thanks very much for having me on camera this morning. So my name's Andrew Benitz. I'm the CEO of Jersey Oil and Gas. We're an oil and gas company that's based in the North Sea, in the UK North Sea. We're focused in one area. It's called the Greater Buchan area that we've been putting together, assembling an asset base in the heart of the central North Sea over the last few years. And last year was a critical year for us, in which we achieved a double farm out. So we brought two other partners, two highly credible oil and gas companies to come and join us in unlocking the considerable value that exists within the Greater Buchan area.
Andrew, the Greater Buchan area, that's where your main asset is. Tell me just a little bit about it, because there'll be lots of people who are new to Jersey Oil and Gas. Before we get into the detail of farm outs and how the company plans to develop it, can you just tell me what is the Greater Buchan area?
Sure. Well, let me tell you the history of the company. So I co-founded the business in 2015, and we went out on a journey to look for opportunities. And we came across a company that was challenged. It was potentially moving towards administration. It was on AIM, and that's how we ultimately got our listing. And it was a company called Trap Oil. And we cleaned up the portfolio, removed economic liabilities from some loss-making production that they had, and we recapitalized the business, and we inherited a portfolio of exploration opportunities. And we quickly identified the jewel in the crown, so to speak, and that was an exploration play that was just north of the Buchan oil field, and it was an exploration prospect called Verbier, which we ultimately farmed out to Norwegian oil company Equinor, and we had an exciting ebb and flow of exploration successes, followed up by an appraisal well, which was dry, unfortunately. We took an opportunity at that time to remain in the area, so we acquired out Equinor's interest, and we had an opportunity to license up the Buchan acreage, which sits just a few kilometers to the south of Verbier. And we were delighted in 2019 to secure in a license round the Buchan oil field. And so that changed us overnight from a early stage exploration company into a company with a significant development opportunity in the heart of the central North Sea.
Because the Buchan oil field is when you say it's an oil field, it's a past producer.
It's a past producer. It's significant in its size. So it was discovered originally in the 1970s. BP put it on stream in 1981, and it produced amazingly for 36 years. BP originally thought it was going to produce around 50 million barrels, and 36 years later it was still producing, and it produced 148 million barrels. And the reason why it stopped production in 2017 was because the topside facilities that we used to produce the oil were 36 years old. They failed their safety case and had to be removed and decommissioned. And so they were removed and decommissioned by the then operator. And then the license was handed back to the government, and we had an opportunity to license it up. And we've done extensive subsurface work on the project, and there's a very material remaining amount of oil that's yet to be produced out of Buchan. And this is a conventional development. We're not looking at anything technologically complex or
you're not fracking.
We're not doing any of that. What we are simply doing is drilling the development plan is to drill up to 5 deviated production wells into the crest of Buchan, and then there's a very significant aquifer underneath the Buchan reservoir where we plan to drill 2 water injectors and use that to repressure the Buchan reservoir and produce out the remaining oil. So to date, it's only produced 29% of its recoverable oil.
When you said that when production ended because the floating production vessel, the FPV, was exhausted or kind of worn out or corroded or end of life or didn't meet safety regulations, whatever, you said that there was a considerable amount of oil left in Buchan. What was that number, and has that number changed since you've been working on it?
The operator, and we're working now with Neo Energy, and most recently we farmed out an equity interest to Serica Energy. We're all very much aligned around a number of about 70 million barrels of remaining oil yet to be produced down at Buchan.
Has that changed? Did you do kind of exploration work or reevaluation, or was that a number that you inherited from the previous operator? And have you just kind of confirmed that?
There's been a number of studies done on what remaining oil is there, and there are a number of different studies relating to that. I mean, ultimately, it does depend on what development solution you use, and so key to the farm out process that we went through, we set about looking at how to engage with industry. I mean, it was key from us as a relatively small oil and gas company sitting on a very material asset that we needed funding support from industry, and so our engagement strategy was going out to a number of different operators in the North Sea and talking to them about how they would look to develop the project. So within Buchan being in the heart of the central North Sea, it's surrounded by a significant amount of infrastructure. So there were opportunities to maybe tie it back to existing infrastructure, or as the development solution that we've now alighted on, of redeploying an FPSO, which is a floating production storage, an offtake boat, and that is the solution that we're now taking forward. So we announced in November last year securing this FPSO, and that is now, based on that development solution, our estimate on the remaining oil is around 70 million barrels.
And you said earlier that kind of only 29% of the kind of the oil in place had been recovered. So there was, by inference, there's 71% which is still there. And you're using this kind of repressurized aquifer to drive to elevate the pressure in the reservoir. Is that kind of standard practice? How much of that 70 million barrels, is that kind of in line with benchmark what's happening in other areas of the North Sea in terms of kind of the available oil, recoverable oil of the total kind of oil in place?
So the Buchan oil field is a clastic reservoir. It's Devonian of age. That is fairly unusual in the North Sea. So it's quite a unique reservoir in that respect. There are other analogues to the north. There's a field called Clare, which is produced by BP. Slightly different. It's more compartmentalized than Buchan, but nevertheless, Buchan is a fairly typical. It's a fractured reservoir. We feel that, our subsurface work has indicated that with effective water injection, we can get the recoverable oil up to a little over 50%. And there are plenty of fields in the North Sea where recovery rates are well north of 50%.
Okay, so it's a pretty kind of conventional development, even though there are not many of those Devonian reservoirs in the immediate vicinity.
Correct. Yes.
And kind of just sticking with the kind of the technical plan and the development plan, you've signed out you've got these two farm outs, and we'll come on to the kind of commercial terms in a bit. But talk me through the timelines from here and what happens, and what are your staging posts, the milestones towards production?
Okay, so one of the benefits is that we spent, since licensing it in 2019, we've spent a lot of time working up the concept select for taking this project forward, and then when we farmed out to Neo in April last year, they came in and could hit the ground running, and we definitely had a development plan already in tow, and so you'll have seen in November last year, we announced the securing terms to acquire an FPSO. And that FPSO is currently on station. It's on another field in the North Sea, which is called Western Isles. And the operator of that is called Dana Petroleum. And in fact, Neo Energy is a partner on that field. So that they know the FPSO with a significant amount of detail, very comfortable with it. And it's a young FPSO. It started operating life in 2017, so it's only been operating as a new FPSO since for the last 6 years. So it's in great shape. It's very well suited for the Buchan redevelopment in terms of its technical capabilities. So I think that's a critical piece of the story is the infrastructure and the redeployment of that infrastructure over Buchan. So a lot of the development timeline can be at risk when you're building new infrastructure, and so the fact that we're redeploying this existing infrastructure and the relatively modest modifications that are required with it give us a lot of confidence that we can meet the development plan. So to answer your question, the development plan is we're in the FEED phase right now. So that's the front end engineering and design phase. So we've gone through concept select. We've secured the terms to acquire the FPSO, and then we submitted the draft field development plan in December last year. And then importantly, we submitted the environmental statement in January this year. And so that sets the clock for securing FDP approval. And we're targeting later this year for securing development approval. And then we go into the development phase. And the FPSO will go into a dock. There's relatively light modifications around the water injection handling capacity, and importantly, the electrification of the FPSO. So part of our plan is to make this a low carbon production project, and so we will make the FPSO electrification ready, and then when there is suitable green energy in the vicinity, we'll be able to power it. And the plan is to power it with offshore wind. And there's a license round that the Crown Estate Scotland launched last year that there's two opportunities to build floating offshore winds within 30 or 40 kilometres of Buchan. Once those are operational, we can literally plug in and power the FPSO with green offshore wind energy.
And until then it'll be powered by diesel generators on board.
Correct. Yeah, which are already obviously on board.
And so they'll be able to power the FPSO when the wind's not blowing.
So the backup will actually be the offshore wind farms will have a grid connection, and so you can bring in grid power when the wind is not blowing. So you always have the backup of being able to power it. And yes, as a third to backup, you've got
belt
the
and braces.
Yeah, they're actually gas generators.
Right.
Anyway, so that's the plan. So the development timeline is actually really quite short. So if we secure FDP approval this year, we're looking at first oil in late 2026. And the main
what's the risk? What's the mood music around FDP approval? Because every man and his grandson is kind of up in arms about oil and gas development, but there's also on one, there's a small part of the kind of the rational brain of the economy of the British Isles that still thinks that we need energy, reliable energy. So there are a few functioning neurons still in there. Does that mean that the approval process is subject to the kind of court of public opinion, or is it a kind of a more streamlined and perhaps a rational approach?
There is a rational way of going through There are government bodies. You have the NSTA, North Sea Transition Authority, that regulate the licensing of offshore oil and gas. You have OPRED, and OPRED is a key government department that is tasked with going through the environmental statement that we've just lodged. So there is a tried and tested way of going through field development approvals. Yes, it's interesting. There's a lot of noise and politically, socially, about the relevance of oil and gas. My simple answer to that is that homegrown energy is better than imports. And whilst there is still demand for hydrogen.
So Andrew, when I look at Jersey Oil and Gas now, and we're looking forward to production at some point in the future, can you give me the timelines and kind of the key milestones, what needs to happen between today and oil flowing, the molecules flowing?
Sure. Okay. So one of the great advantages is that we've been working on this since we got licensed it in 2019, and so we did extensive work on the concept select, and then when we farmed out to NEO, who are now the operator and in charge of taking the project forward, they were able to hit the ground running, and so when in November last year we announced the securing of the FPSO. That's really helped set the timeline. So in December last year, we submitted the draft field development plan to the NSTA. And January this year, we submitted the environmental statement to OPRED. And now we're in what's referred to as the FEED phase, so the front-end engineering and design phase. And that takes up to the point of FDP approval. And our plan is to secure FDP approval in the latter half of this year. Once we've secured the FDP approval, and then we start the clock on actually developing. And often the risk associated with the development phase is the time it takes to build the infrastructure. The good news in our case is that we are redeploying existing infrastructure that is already built, and so the timelines are we can be much more confident on. And there's a relatively short timeline from FDP approval to first oil, in which we're targeting late 2026, in which the bulk of the work is really the drilling of the wells, drilling of the water injectors, and then the hookup to the FPSO. So just reading that back to you, it sounds like you've got 1 year of kind of desktop stuff, which is the engineering of the FEED study plus the approval process. So 2024 is approvals and final details, and then it's a 2 year kind of development, 2025, 2026. Yeah, that's right. And so you'll see in our most recent presentation that we've secured all the main contractors for the FEED phase, and we're working through with them right now, and then we will contract the actual development work at the point of FDP. Yeah.
Normally in the resources sector, there are kind of long delays and kind of capital overshoots. Because you've got an existing FPSO, it seems as if the kind of the technical side of things is slightly de-risked. But let's come back to the kind of the first year, which is the approval process. You need to get your field development plan approved, and you need to get your environmental sign-off. Is there a risk in that? In this kind of slightly anti-oil and gas environment in which we find ourselves, are there any precedents of other field development plans and environmental approval, environmental impact assessments kind of being approved by government to give you confidence that it can happen within 1 year?
Yeah. So last year there were 7 projects that were FID'd. And there's a very tried and tested process for going through that. I think it's fair to say that the current government is very supportive of getting FDPs approved, and the potential for government change. It's been very clearly stated by Labour that they do not plan to revoke any licenses. We have an existing set of licenses that that the Greater Buchan area are within, and so there's a very tried and tested path for securing FDP approval on this.
But it would still give you comfort to get it before the November election.
And we're working at pace on that right now. And you know, it's one of the great things to be working with joined up collaborative partners. You know, NEO and Serica are significant entities, and NEO's the 5th largest producer in the UK North Sea. Serica's the 10th largest producer. NEO's fully staffed the project team, and they're working at pace to get this approved. So it's a very joined up partnership, which works well, and we're all aligned on getting to FDP approval.
Have either of your partners been involved in a kind of a recent approval of a field or an FDP in the North Sea?
Yes. NEO approved a tieback of one of their assets last year. So absolutely, and in fact, actually, our development teams have worked together in the past on previous projects, and some of the largest projects in the North Sea. So just to the west of Buchan are 2 fields called Buzzard and Golden Eagle. Buzzard's the largest oil producer in the North Sea, and our project teams worked on those together at a previous company. So, you know, we are very joined up in that respect.
There's a kind of a core Ithaca Energy element to your project team, isn't there?
So yes, Ithaca Energy is close to our heart. I was delighted to bring on our chairman, Les Thomas, in a couple of years ago, and Les was the CEO of Ithaca Energy from the very early stage, producing a couple of thousand barrels through to producing over 80,000 barrels, one of the largest producers in the North Sea, and he helped me bring and encourage other key members of the Ithaca team to join. So Graham Forbes is our CFO, and Richard Smith is our Chief Commercial Officer, and we've got I'd say a extremely strong team for a company of our nature. That is very capable of taking projects forward like this. Yeah.
Now you've kind of laid out the 3-year to production scenario. Why should shareholders care now? I mean, why should we buy shares now, and why not wait until 3 years' time? I mean, what are the catalysts that you think can come through in terms of value for an investor?
Yeah. So securing FDP approval is a critical milestone, and that's a this year event. Even earlier than that, we announced the farm out to Serica in November last year, and we're due to complete on that. So we've indicated that that's a Q1 completion event, which will bring in cash. I mean, I think it's important to just go back and outline to the investors what the farm out terms that we secured. Because they are excellent terms for our shareholders and go some way to demonstrate why this is a great value opportunity. So the terms that we secured with both NEO and Serica are replica terms, and essentially there's a series of cash payments that in total are $38 million, and those are some of those are being paid now, some will be paid on the Serica completion. And some will be paid at FDP approval later this year. So we're expecting $38 million of cash, which is a significant amount of our current market cap during the course of this year. And then
remind me of your market cap.
Our market cap today is around $60 or $70 million. So around half our current cap will be in cash, and then. More importantly, it's the carry associated with the terms that we agreed. So we started last year with 100% of the Greater Buchan area. Today we have 20%, and so we've sold 80% of the licenses in return for a series of carries. So a full carry through to FDP approval, and then a full carry based on the approved FTP budget right the way through to first oil. And so our 20% carry is a material benefit to our shareholders. We're currently estimating that the capital cost to take this project to first oil is roughly between 850 and 950 million pounds, and so that 20% carry is a material amount of money that we're funded for. So a huge opportunity for our shareholders.
When does the budget kind of get set? Because you're not fully carried through to production come what may. You're fully carried to the FDP plan. Is that right?
Approved budget. So at the point of FDP approval, the budget will be agreed, and that is the budget that we will be carried for. Yes.
And that's after the feed study.
Yeah, correct. Yeah, that the feed study will sort of narrow in and secure that actual cost estimate, and that's when you're contracting out all the main work, and so and there is of course contingency within there. So it'll be a very so well-founded cost estimate. And you're right to say there is a possibility of a cost overrun. Beyond that, I think we're quite well insulated. Partly, we have a significant amount of cash in the company, and then also there is an investment allowance that exists within the North Sea today of 91 pence in the pound, and so actually, if there was a cost overrun, we're quite well insulated with respect to that.
And you said your cash position, I saw you put out an update at the end of January, which said you had £10 million at the end of the year. Let's call it $12 million. You add that to the $38 million. You're looking at $50 million kind of...
No. The £10 million was with respect, we had some cash payments coming in from the NEO deal. And so that in total was a little over $11 million, and then we expect $6.8 million on the Serica completion, and then there's a final $20 million at FTP approval. So in aggregate, it's $38 million.
Okay, and
or to put it another way, we're expecting our cash at year end of this year to be a little north of 25 million pounds sterling.
Andrew, when I look at the core NAV that you've just described of the company, you said that there was kind of a cash element and $213 million from the attributable portion of Buchan. So your kind of core NAV of around 250 is about 4 times your current market capitalization. So you're trading at a 75% discount to what you believe is kind of core NAV. How can you justify that, and what do you expect will be the elements that help close that discount gap?
Yeah, I think as we get the project sanctioned, as we move into the development phase, as we get closer to first oil, that will naturally unwind. And there is an element of traveling and arriving. We've had a story that is literally been built ground floor up. So we've gone through the ebbs and flows of the high risk phase, and we're now transitioning into a core value phase. And so there is an opportunity for a transition around some of the investor base. We've got a very good supportive shareholder base that is a mix of institutions, high net worth individuals. There's a retail tail. And so over time, I think that there will be some evolution in the share register. There's an opportunity for stronger institutional support now that we've de-risked the project significantly, and we're moving into that sort of value phase as we go through the development. And yeah, I mean, there is an amazing disconnect between the core value and where we're currently trading. So I think there's a huge opportunity as that unlocks as we tick off these milestones.
Yeah. And you're on AIM. I've seen companies which have kind of coming into production get very good volumes and kind of get good traction and get the backing of AIM. Are you still in the kind of on the naughty step with kind of low liquidity and kind of slightly ignored by AIM? Or what's that relationship been like in the last couple of years?
Without question, the AIM market has been significantly sold into, and in the last couple of years, I think AIM in the last couple of years is down around 50%. So it's not easy. It's not plain sailing, but there are plenty of diamonds in the rough, and I'll be bold enough to think that Jersey Oil and Gas is one of those. And so it's a question of us getting out, telling the story, and we've now got a really, really exciting story to tell. We've done this really difficult phase, the exploration phase, the early kind of development phase, bringing in really credible parties to come and join us, being funded to take the project through to first oil. These are real, de-risk moments, and I think the market will start to see that and start to see the opportunity, and that's exactly why I'm talking to you today.
Well, Andrew, thank you very much for the interview. Good luck with the year ahead. I think the next major milestone will be the completion of the Serica farm out, if I'm not mistaken.
Yes.
Well, good luck, and let's see what happens during the course of the rest of the year.
Thank you. Appreciate the interview.